day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the black minds, margins and leverage like mountains to climb.
Okay, so now as I read down them, let's start over. All right, quick market recap. Welcome to, what is this, 10/27/2025 of Noobs. It's a Monday, and the VIX is down on the day, about 40 cents or so. The NASDAQ is up about 400. That's that's not the NASDAQ, though. That's the VIX futures. There you go, NASDAQ. This is the NASDAQ micro contracts, up about 400. Big update in the NASDAQ. Tesla's up pretty good today, along with things like Nvidia and even Apple. So then below that, you've got the S&Ps /MES right there. It's up another percent today, another strong day, 2 in a row. The Russell is up 7 points. It was up a lot more. The Russell is /M2K. You can see that we were up more earlier this morning. We've given a lot of that back, but we're bouncing a little bit here. It was pretty much flat a few minutes ago. And then the Dow /MYM, again, the micros, is up about 200 points. You didn't open the Dow /MYM. Yep, there we go. It's up about 0.5%. So overall, weakest on the day is pretty much the Russell. Strongest on the day looks like it's going to be the NASDAQ. Then gold and silver, both down on the day, coming off of their highs, massive rallies that they had. That's silver. Gold is the one above that. There you go. That's affecting our palladium position that we have on, because it's also a metal. And then the rest of it, we don't give much crap about for the purposes of this, other than maybe crypto. So you can see down there /MBT, crypto or gold or Bitcoin is up about 5K. Below that, Ethereum, it's up about 300. So strong days for crypto as well. So go ahead and open up your positions tab. We'll get right into it. Gold, I didn't mention oil. Oil is pretty much flat, and then natural gas up on the day. All right, so let's go into Apple here. So we got Apple, another, like I said, strong up day. Go over to your beta weighted delta, and we'll see if anything sticks out at us right off the bat. All right, so the first thing that I see is that Nvidia has about 12.5 delta short now. Originally, when we put that on, it was around 7, recall. So again, with this one, with that delta getting bigger and bigger, what would be the thing that you would do to adjust that one?
Yeah, I was saying buy closer to the mid price, or sell closer to the mid price.
What do you mean?
Buy it back and sell it close to the mid price. Isn't that
So
what we've been doing?
Scroll back. You have to look at your position in there. So scroll back to the left and look at what you've got in there and what it's marking for. You only have a call in there. You have a short call.
Yeah, so wouldn't you buy it back?
What did we do in MU when it got to this position?
We sold another. We counteracted the delta. We bought it. What?
Open up MU, see what you have in there now. We started with a short call in MU.
Yeah, and at 175.
No, the short call was 250. We started with that 250. We sold it for about $2, and it got up to the point where it was giving us too much short delta. So we got our short delta back in line by doing what?
Selling a put.
Yes.
Oh.
So it might be time to do the same thing in there to kind of get that short delta back somewhat in line. See what you can get for a short put that gives you, let's see what your delta in that is. 20 delta on the call. So go down to your short puts and see what the 10 delta short put is going to give you. And delta is around the 160 strike. So you're going to have to look at the price of that. 160. Yeah, I like that. To go ahead and sell either the 157.5 or the 160. You could probably sell the 160. That seems fun. Yeah. Put it to mid.
Oh, clicked off of it.
Did you send it?
No,
Review?
I accidentally clicked off of it.
Send. All right. You got filled. Now go back and check out to see what that did to our overall delta.
No,
It's back around where we started with it. If it continues to move, we'll continue to adjust either side accordingly. All right, and Apple is moving against us, but it's still only -7 delta, so I think you're probably okay with that. I kind of like that where it is. I don't think I'd adjust that. You can see here Tesla is finally doing what we wanted it to do. Remember, Tesla was losing the other day. It's had a big rally today. And now what we sold for $9 is worth $5.70, so it's up $321. Quite honestly, Tesla just broke through another range that was a significant price level. If you open it up, look at the chart. Click on it. Click on your contract. Click on your contract.
Oh, this.
Yep. And then go to show Tesla details, then go to your chart, then go to like the 3-year chart or 1 year day chart. So effectively you see this well, you can't even really see it anymore because it's so insignificant now, but there was a little bit of resistance that we were expecting around the 156 price point. We blew right through that. And now the next level of resistance, I want you to go ahead and on your let's see here. How do we do this? Click on your chart and something will pop up when you click on your chart. Yeah, you see that little drawing tool? Click that. Say new. Then do price level. Then click back to the left of that. You see the big tall red candle? That's the highest point on that chart. Click over to the left of it.
Oh.
To the left of it. Drag it over. No. What are you doing? Get it back up. What did you do? Go to the left of it. A significant amount. Now drag that to the left. There you go. Drag it up around the same parallel to that. There you go. Yep. And now go to the right of that and click again. There you go. Now drag that to where it's right at that point. Yep. Just right on top of that. There you go. Yep. Now go to hit that little bell up there and then say create alert. Wait, no. Ah, crap. We put the alert in the wrong spot. So go to your alerts and edit it. Yeah, just delete it.
Well, how do we do that?
Just click on it and say cancel alert. Yes.
Could not
Close.
cancel. It just
That's because it already got used. It's fine.
Oh, no.
Close out of here. Go back. Now just put your mouse at that same price, or put your finger at that same price point. No, don't adjust that. Click off of that. Now put your finger at that same price point without touching that line. You can do it to the left of it. Why can I not see the line? Does it not make a line for you if you put your finger on? Hold it down. No, not on that. There you go. Now you got your line, but your line is, see your line way down there? There, what you just had this we're struggling. You see that cross? You see that cross right there? You have a cross line.
Yeah,
Put it somewhere lower. Bring it down lower.
but I can't. That's a whole.
Put your. There you go. Now put that line up to that top of that big red candle. There. Now let go, and now hit the plus bar, or hit the bell. Now set that as an alert. So that's the price point that we want to be notified when this thing breaks out above that level. So that's the next key level that we're tracking, which there's really not much between here and there. And if you zoom back out, you'll see that right above that, do the same exact thing with that price point where it peaked out back a year ago. Same exact thing. Put it there. Yep. And then go ahead and put another alert right there. Since you've got some positions on, we just want to make sure that we get a notification when we break those levels. All right. Go back into positions. So I don't think I would close this. It still has $500 for you to make out of that position. You've made 300 so far. Your Russell position up on the day. Let's go to MP. MP really gave us a lot of trouble today. I made several adjustments in here today. First thing that you'll notice, our short put that we were going to get assigned shares on tomorrow or the end of this week, I bought that back and I sold a new one out in January. So I went from basically 4 days left till expiration to 80 days left till expiration. But what that allowed me to do is move the strike price down by $7. I had to pay a little bit of a debit to do that, which traditionally you would want to do that for a credit. But what you'll also notice here is these calls, I moved these around today as well. Originally, I bought back this November 82 call. That 7 November 82 call was the call that we had going into the day, and it was down to being worth only like 50 or 60 cents. So I then rolled it down to the 75 call on the same weekly expiration, collected more credit for it. And then this thing just kept on falling. It's bouncing very nicely now, which is, yeah, par for the course. Of course, it's going to bounce after I adjust, but you still have to be mechanical and make the adjustments. Open it back up. So I collected even more for selling that, rolling it down to that 75. And then what I did when I rolled out this 75 put all the way out to the January, what I did was I made sure that my credits that I collected for rolling these two contracts down were more than the debit that I paid. You know what I say? You know what I mean when I say credit and debit?
No.
So like when you sell a contract, you get a credit. That premium that you get, that's in the form of a credit to your account. So they put that money in your account. They put that cash in your account. It's a credit. When you buy a contract, you pay a debit. They take the money out of your account. So when I say I got a credit or I paid a debit, that means I'm buying something, I'm paying for something, or I'm receiving something. A credit is receiving something, a debit is paying something. So what I mean when I say that the debit that I paid to roll this out, because I was able to roll it $7 lower, but I had to pay a credit or a debit of like $1.60 or something. So go into orders, the orders tab, and then go to filled, and you'll see what I'm talking about here. So originally, that first roll that I just rolled it down, I collected 99 cents for. You see it? One at the very bottom,
Yeah.
where I bought back the 82, sold the 70, what is that, the 75 or 76? I can't read that, 75, I think. And then I collected a credit of 99 cents. And then again, I did another roll where I rolled it out into in time, collected another credit of $1.25. So the total credit is about 224, or is exactly 224. And then you see this negative in front of this one. So I'm selling something for a negative. So it's a double negative, which means I paid a debit.
What's that
By se-
75/82? But
What do you mean? The 75, this
75
those are the
slash
strikes. Yeah, those are the strikes. So I took it from the 82 put in the near term cycle, 4 days from now, and I sold the 75 in a later dated cycle. That's what that's telling you. So I took it from October 30. You see the 31 October? I took it from
Yeah.
31 October to 16 January. Okay, so you see how the total of those credits are larger than that one debit that I paid. So net, when all of that is added together, I did all that for about a 75-cent credit. So I moved our risk lower by about $7, and I gave us another 75 cents in credit. But what I gave up, now go back to your positions tab. What I gave up is I have to wait a lot more, a lot longer now in order to realize that credit in profit. So before it was a 7-day contract or a weekly contract. Now it's an 80-day contract. So it's like 3 months or less than, but close to. All right. What else?
what about Angel Studios?
Yeah, it's down on the day. Not really a lot you could do in here. I mean, if you wanted to, let's see here. Angel Studios. Let me open this up and see, because I still can't see the best when we're streaming this. Let me open this up.
We're down a lot.
In what?
Hmm?
We're down a lot in what?
No, I was saying like I see a lot more in red than green.
You're net, you're down $60 on the day.
Still just
But
trying
you're-
to figure
you're-
out like the differences between like open, like just looking where you're losing and gaining money.
Well, P&L open doesn't really tell you a whole lot, especially if you've done adjustments, because every time you do an adjustment, you're taking your winning side off and putting a new position on. So you're always removing your winning side to adjust it closer to the money. So that P&L open is going to continue to carry your losing side, and it's going to constantly be getting rid of your winning side every time you make an adjustment.
So the piano day is where you want to look at to determine if you're up or down.
Or down on the day, yeah, P&L day. If you want to look at your overall losses and wins in the stock that you're trading, go ahead and look at the P&L year to date.
So overall,
So
we're
far-
up 715.
Only in these positions that are currently on. Some of them we've already taken winners and we're not even in those anymore. So it's not going to tell you the total.
Yeah, I mean, yeah.
In the current positions that we have on, we're up $716. But you've closed out, like, you don't have your Oklo on here anymore. That was like a $300 winner. Your bull, we put in that. Remember that Webull position that we put on a good till cancel order that got hit, and it came off of there. You didn't even know that. You made $30 and you didn't even know it.
AMD.
AMD is not on there anymore. That was another $250. So pretty much the ones that are the losers, these are the ones that we're still working with. We typically don't close out of losing positions until it gets to a point where you think it's not really worth the risk anymore and it's not going to come back. Then we might move on to something different. But these, I think, are all within the realm of eventually becoming profitable positions. Even this worst one in MP. This one's probably going to take the longest. But if at a minimum, what we can do is we're down $900 on it right now. If we get this down to something like only down 400, then we can take this contract that's far out in time, and we can move the contracts back, take on a little bit more risk, but closer in expiration. So we can go from the 80-day and take on a little bit more risk in a nearer term cycle so that way we're not out so far. We'll just play that by ear. We may do that, we may not. Let's see. Did we want to look? Is there anything that's winning that we want to take off? Really, not. Not really. I mean, Palladium is is it winning today? No, it still says it's down. It's bouncing on the day, but it's still down. There's really nothing other than Tesla that you could really take off here, feel great about. But I wouldn't take Tesla off. I would leave that go. I think you did get assigned shares in AG, so you could make an adjustment in here. You're still down $70, so let's look at AG. Remember I said you were going to get assigned shares? Lo and behold, you didn't buy them. They just were put right into your account because your put was so far in the money. So go over. This is a good learning tool. Go over to the right and see what you bought these shares at. $15 per share. So go scroll back to the left. So you bought these at 15 per share. It says you're down $247 on the shares, but look at how much your P&L year to date is in there down. Are you down $247? No, you're down $72. Why are you down $72 if you paid $15 for shares that are now worth $12.50? Why aren't you down the full 250?
Because of the 1350, like that's the call. We saw a
That's
call.
part of it. But go here, do this. Go to orders. Go into all.
I feel like we've talked about this before. I don't remember the reason
Yeah.
and why though.
Go to today. Click on filter. Then go to last 30 days. Now type in no, go back. In the search tab, type in AG. Okay. And now go to order status and then uncheck everything and then only check filled. Is that done? Hit apply. This is going to show you all the orders that you've been filled in AG over the last few months. So look at what we're doing. Look at what all of this is. All of this is why you're not down 250, because originally when we put the position on, what did we collect? We collected 56 cents. Then we made an adjustment that collected us another 41 cents. Then we bought something back for 13 cents and sold again for 34 more cents. Then we collected 38 more cents, then 17 cents, then 19 cents. So when you add all that up, that's the reason you're not down $250, because you've been collecting money against this position the entire since we first put it on almost a month ago, or 20 days ago, 21 days ago. So in 21 days, you were able to reduce your cost entering into this stock by almost $200. And we're going to continue to do that with the calls. So go back to your positions tab and now go to the call, go to, and then go to options. Now we're going to take this out to the November cycle to get a bigger buffer and credit. So buy this one back and then go out to the November 21st cycle. 21st. 21 November, yeah. Scroll down. 1350 gives you what? 66. Take it to the 14. Sell the 14 in there. That'll give you another like 40 cents maybe. Hit next. That gives you another 40 cents in credit, and it gives you room for this thing to rally $1.50 higher than where it currently is. So if those two things happen, go ahead and send it. If those two things happen, or it rallies up to 14, you're already going to be in profit because you're only down 72 cents and it's currently trading at 12.50. So if it rallies to 14, that's $150 in profit right there. Plus you get to keep this 56 credit. So that's $200 more that you're giving yourself room for this thing to appreciate in value. So basically, if at that point you were to let the shares get called away, you would be sitting with about $125 profit in this trade. I think we've gone for about 20 minutes or so. Is there anything else that you want to look at?
I think it all
Scroll to the right.
looks happening.
What's that? I can't hear you.
Said it all looks like there's not really that much like changing right now, anyways. Like not a lot
N-
we can take.
No, I mean there's a lot changing, but you have offsetting positions here, so it's not that crazy. Go scroll to the right again. What does your delta tell you?
Theta is the risk or the time. I remember theta. That one's time of decay,
Yeah,
and then delta
but
was the
it was a couple of
the
things I
movement.
gave you example.
Yeah, it was
Directional risk.
yeah
Your directional
risk.
risk. And then what else could we use it for?
I remember if you go to like, it's the same thing as looking at like the PMI. Wasn't the same thing as the PMI?
Probability in the money, your probability of success. If a contract has 30 delta, there's about a 70% chance it's going to be out of the money on expiration. So it's about a 70% chance if you sell it, you're going to make money on expiration. And then there was one other thing. So look at the delta in Angel Studios. 353. Open up Angel Studios and look at how many shares you have in Angel Studios.
200.
200. And what else do you have in Angel Studios?
Selling 3 puts and 2 calls.
Yep. So those 3 puts are saying we're going to buy it at what price?
$4 or $1.35.
No,
Bought it
that's
for.
what we sold those for.
sold
That's why they're, yeah, you see that it's currently worth $1.27. That's why we're making money in there, because we sold it for more than what it currently is trading at. But look at the contract itself. It'll tell you what strike price. So we're agreeing to buy it at 750, which currently it's not 750. So it's in the money, which means it's going to have high delta, right? So we're going to get a lot of long delta for these 3 short puts. So go back over and see how many it was. It's about 180. If we divide 180 by 3, that's about 60 delta per contract. So it's behaving. So how is it behaving? It's how much is each one of those contracts is behaving as how many shares of stock?
So 200, 350, so 50. Right.
If there were 3 contracts and they were each behaving as 50 shares of stock, then we would have 150 long delta. But we have 180.
So like
So
60. Yeah, you already said
yes.
that now.
Yes. But that's the third thing that delta tells you is your share equivalent. It can be used for probabilities. It can tell you your overall directional risk in the market or in any specific position. And it gives you the share equivalent or the size of your position. So the size of your position relative to the stock price is your pure delta. The size of your position relative to a beta, like something that is the same for your whole portfolio, that's the beta weighting portion of it. So if we want to see what the equivalent of this position is when compared to something like the SPY, it's only 12 delta. Even though it's the highest one on our list with 357 delta, it's really not that big of a position because it's not a high priced product. All right. I think that's all we'll cover for today, unless you had a stock you wanted to put on or a trade you wanted to put on.
I don't have anything else.
Webull. I think we should do. Yeah, let's do a fun trade in Webull. Go ahead and type in their bull up in the search. Type in bull. Yep. Click on that. Let's get you into buying some calls. So go to February, out in time. Go to the 15 strike. Go to the ask, and we're going to buy 3 of these calls. So go next. You can change it there. That's fine. So next, to go to mid price, 159. This is the opposite of what we normally do. It's going to be about $500 to put this on. Go ahead and send it. See if you get filled. Did not get filled. You might have to tick it up to try 160 or 161. It still didn't get filled. All right, tick it up again. When we get out into these, all right, you got filled. Let me show you something here. Go back into Webull, the options chain. I'm gonna have to break this up into a 2-parter. All right, so now go to the little cogwheel and find open interest, open INT, add that, and then also add volume. Is volume already on there? Go all the way to the bottom. Volume, add that too. All right, so now find them on your thing here. There. So you see how that 15 strike has 16. Oh, it's got a lot of open interest. Wow, a lot of open interest. And there was almost 1,000 of them traded today too. Okay, so let's compare that to a near dated cycle, meaning something that's closer in time. Scroll down.
So
Near dated cycle,
instead of 16,000.
less contracts. I wonder why it was so illiquid if there's that many trading. Usually the illiquidity comes from a lack of volume and a lack of interest out that far in time. Because the person that's taking the other side of your trade, the market maker, is going to have to, they're going to want to be compensated a little bit more in the spread, usually if they're taking that long of risk. And usually there's not as many people playing in that expiration. So they're able to get away with picking you off on the spreads a little bit more. But in this particular case, you had just as much volume in the February contracts as you did in the November contracts. Did you pick the weekly expiration or did you pick a monthly?
I picked a week one.
Oh, pick the monthly. Go to the November 21st. Now look at the 15.
36,000.
Yeah. That's the weeklies. Weeklies don't exist until you get about 7 or 8 weeks out or 6 weeks out. So those products, look at the option chain, minimize this and look at the option chain. So yeah, the volume is way bigger in that near dated cycle, that 21 November. But you see how the weeklies stop at a certain point.
Mm-hmm.
So as this week ends, they're going to create a new set of weeklies.
It's like 2 months.
For the next December 12th. The December 12th weekly will be created as this week ends and we go into next week and so on and so forth. So that means that these contracts for the weekly cycles have only existed for 1, 2, 3, 4, 5, 6 weeks. So there's not going to be as many people trading them as people that have been taking bets for months and months and months in these longer dated cycles, because these monthlies and quarterlies out here, some of them have been on for a year or 2 years. There's more people that have had a lot more time and there's more liquidity in them typically. So more people tend to trade the monthly cycle than they do the weeklies.
Okay.
But all right. That's all I wanted to show you. So I think we're done for the day. But sorry. What did we do there? We bought contracts. So if we bought calls, normally we're selling calls. What do we want to happen if we're buying calls?
For buying them?
Yeah, going to bull. We bought
For
those.
it to go above that price so we can sell it and someone buy it from us?
Yes. We want, this is a bullish position. We're saying we want the option, not the obligation.
The option
To buy
sell
these
to someone
shares.
at that price.
No, we want the option to buy the shares at that price.
Oh.
So someone else that sold them to us is guaranteeing that they will sell them to us at $15 a share. So if this thing goes to 20, those contracts are going to be worth $5 a piece instead of $1, whatever we paid for them, 60. Oh, we'll do a little bit of some long delta in here just to kind of get you used to both sides and knowing what it's like to be the buyer and the seller, so you can see the movement on both sides. But mostly we're going to be selling. So now we're done. So thanks for watching, everybody. Don't forget to like and subscribe.
Can't you see the candles rise and fall? Risk and reward, it's a game of all or no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. These facts, faces blank as empty streets. Hedging positions, but the questions repeat. Time decay means nothing to the young souls. In this marketplace, it's like digging holes. Iron condor flies, but it never lands. They can't grasp the feel of these trade winds. Liquidity try choking on the sand. Profits and losses, they'd rather go play bands.